Welcome to the Insider's Guide to Custom Homes. I am Rick Bell, founder of Landmark Custom Homes. For more than 4 decades, I've helped people turn their dreams into reality, building everything from cozy retreats to grand legacy estates. If you're thinking about building a custom home, this podcast is your roadmap. No fluff, no confusing jargon, just real-world advice to help you stay in control of your vision, your budget, and your journey. Building a custom home can be one of the most rewarding and most overwhelming experiences. So in each episode, I share what I've learned from the field so you can avoid costly mistakes, manage the unexpected, and move into the home you've always wanted. In today's episode, we will discuss in detail the process for financing your custom home. So far, we've talked about assembling your team, designing to your budget, and understanding the construction process. Today, we're taking a step back to look at something critical: how you're going to fund your build. Whether you're paying cash, financing the entire project, or using a hybrid approach, understanding your options will save you time, money, and stress down the road. Okay, do you use cash or do you finance? Cash buyers have a few obvious advantages: no loan approvals, no lender-required appraisals or inspections, and a simple closing process. But even cash buyers often choose to finance part of their project to preserve liquidity, protect investments, or even for tax planning reasons. Always consult your financial advisor about your specific situation. Financing brings its own challenges and opportunities. Understanding how construction loans work and how they're different from a traditional mortgage is critical to building smart. So how do you choose a lender? Not all lenders are created equal when it comes to construction loans. You want a lender who understands custom construction, not just production housing. They offer construction to permanent loan options, also called one-time close. One who has experience with draw schedules and construction inspections and communicates clearly and is accessible. I want to share a pro tip with you. Interview lenders just like interviewing builders. Ask, how do their construction loan programs work? How much experience do they have with custom homes in your area? What are their requirements for dispersing draws during construction? Choosing the right lender early makes everything smoother for you, your builder, and your budget. The approval process. Once you choose a lender, the approval process begins. Think of it in 2 phases. 1, approval of you, your income, assets, credit, and financial strength. And 2, approval of the project, the plans, budget, appraiser, and builder review. In this first part, the bank is focused on you, confirming your ability to qualify for the loan amount you'll need to complete the project. Let's dig deeper into the approval process. Once your application is submitted, your lender begins verifying your financial situation. You'll need to provide detailed documentation including recent tax returns, W-2s or 1099s, and pay stubs. They will also ask for bank statements, asset statements such as retirement accounts, and proof of any other income, like rental properties you may have. They may also ask about existing debt such as credit cards, student loans, and car loans. They'll look at business income if you're self-employed, and gifts you may be using for your project. It's important to stay organized and responsive during this phase. The faster you provide information, the smoother the process moves. But how much will the bank lend? Construction loans are typically based on the lower of the appraised value after construction is complete or the actual cost to build, including land and construction. In most cases, lenders will require you to contribute some equity. Sometimes this is covered by your land ownership, and other times it's additional cash you bring to the table. Typical loan-to-value or LTV requirements range from 70% to 85%, depending on the lender and your personal financial profile. Here's another pro tip. Don't automatically assume the bank will lend 100% of the construction cost. Plan for some cash investment, even if you own the land free and clear. It's now time for the approval decision. Once all documentation is received and reviewed, your lender makes a preliminary decision. At this point, several things happen at once. They order a property appraisal based on your building plans and specifications. They perform a builder review, confirming your builder's license, insurance, and reputation. And they confirm the final budget and scope of work to make sure they align with the loan amount you're requesting. Expect this stage to take a few weeks, especially if appraisals or third-party reviews are delayed. Let's discuss loan committee review. In many cases, once your lender's initial underwriting is complete, your file moves on to a loan committee for final approval. The loan committee serves as an important role in protecting the lender by doing a full second review of the borrower and the project. Here's what they focus on: confirming your financial stability, like your income, assets, and debt-to-income ratios, verifying the appraised value of the completed home, reviewing the construction contract with your builder, ensuring the builder's qualification meet lender standards, evaluating market conditions in the neighborhood and region, confirming the budget is realistic and adequately detailed. Sometimes the committee may ask for additional documents, such as clarification about land ownership and secondary income, or revisions to the project budget to see if allowances and contingencies seem too low. They may seek further validation from the appraiser or builder as to the value of the completed home. Another pro tip: don't panic if the loan committee has questions. It's normal, especially for custom home projects, which are more complex than buying an existing house. Stay flexible and responsive to keep the approval moving. Once the committee is satisfied, they issue a conditional loan commitment, spelling out any final steps before you can schedule your closing. When the committee completes their evaluation, they should provide you with a loan commitment which may have conditions. The commitment may include the loan amount, the interest rate, and required conditions before closing. It may also include expiration dates for certain approvals like credit reports. Another pro tip: read your commitment carefully. Some conditions are simple, like providing updated pay stubs, but others may require additional documentation or actions. Stay proactive. Your builder and lender are now working together to finalize the details and prepare for closing. Let's talk about the loan closing. Once all conditions are satisfied, your closing is scheduled. Loan documents are prepared, title work is finalized, and insurance, both builder's risk and homeowners, must be in place. At the closing, you'll sign several loan documents, and then the construction loan becomes active. Initial draws may be dispersed to pay off land loans, pre-construction costs, or immediate expenses. Another pro tip: construction loans are usually interest only during construction, meaning you pay monthly based on the amount drawn, not the full loan amount yet. How does the build get funded? As your builder progresses, they submit draw requests at predetermined stages. You or your lender's inspector verifies completed work. Funds are released accordingly. Clear communication between you, your builder, and your lender is critical here to keep payments and progress moving smoothly. What about permanent financing when construction is complete? Some construction loans automatically convert to permanent mortgages, called construction to permanent or one-time close loans. Others require you to refinance separately into a traditional mortgage when construction is complete. Each option has pros and cons. A one-time close simplifies the process and saves on closing costs, while separate financing allows you to shop for better rates but can involve additional fees. Another pro tip: clarify with your lender at the very beginning which method your project will use. Financing your custom home can seem complex, but with the right lender, a clear understanding of the process, and a little organization, it becomes manageable and even empowering. Take your time, ask questions, choose professionals who specialize in custom construction. It's your dream. Make sure your financing supports it every step of the way. In our next episode, we'll walk through the construction schedule, how timelines are set, why delays happen, and what you can do to keep your project moving forward. Thanks for joining me on this journey. If you found today's episode helpful, please subscribe, leave a review, and share it with anyone dreaming of building their own custom home. I'm Rick Bell, and this is the Insider's Guide to Custom Homes. Let's build your masterpiece the Landmark way.